Ladies and gentlemen, Greg Michalowski here from ForexLive.com. Today's date is September 23rd. This is a technical analysis, midday technical review. I'm going to spend a minute on each of our major currency pairs, and so let's get going. Let's take a look at the euro versus US dollar. I have it here on the hourly chart. What are the significant things that occurred here in the euro, and what is the bias? We went above the 100-hour moving average in trading here today, but found resistance in this yellow area. This yellow area is where we have there's a neutral zone where there's been a bunch of lows and highs in place, and here now it eked above that level and then fell down. We are below the 100-hour moving average now, and we moved all the way down to test our low level from earlier, or low levels from early in the day around the 88.41 level. As long as the price remains below the 100-hour moving average, the bias remains to the downside in the euro. If we move above the 100-hour moving average, we still need to get above the 200-hour moving average to push this market to the upside here, but we will give a little bit more bullish bias above that 100-hour moving average. Let's move to the sterling versus US dollar. What do I see in this currency pair? I see the 100-hour moving average, that's the blue line in this chart, holding support yesterday. I see the 100-hour moving average holding support and trading here today. Now in the early London, maybe late Asian session overnight, the market fell below the 100-hour moving average but found good support down here. So as a trader, what do I want to do? Well, I want to lean against support. So I'm going to lean against this 100-hour moving average with the anticipation that perhaps the market has found its support level here. We tried to go below the 100 earlier today. We failed. Why should we go below it again now? I don't know, but let's look for support against this 100-hour moving average. If we move below it, traders can put their stop either here, or even just below the 38.2% retracement. That's fine with me if you just want to risk a little and hope that the market moves up toward the underside of the trend line here. That would be our next target at 164.37. Actually, the high would be the next target on the top side. Let's move on to the dollar versus yen. And the dollar versus yen gave the old college try. We fell below the trend line. We fell below the 100-hour moving average. This was the first break below the 100-hour moving average since these 3 hours right here fell and closed below that level. You have to go back to this period right here. We also went 3 bars below the 100-hour moving average. So our 6 bars that we traded below the 100-hour moving average equaled the number of bars below that we've closed below in trading this month. So we had that going for us, but it couldn't sustain that selling, and now we're back above the 100-hour moving average, and guess where support is? The 100-hour moving average. Stay above this level and the bulls remain in control. We need to get above the 109.17 level and then the 109.44 level as our next targets on the top side for that currency pair. As long as we stay above the 100-hour moving average, the bulls remain in control. The dollar versus Canada got a boost from weaker retail sales and a boost from stops being triggered above the high price that we saw in trading earlier today. Now, we did have a huge correction to the downside that took the price to the 38.2% retracement and held that support level. Off of the daily chart, we also held this 86 level, which was the low price through here in December. We did have one day where the market moved up to 96 here, so this 86.96 level was a key resistance level in the month of December. In August was key resistance level in the month of August. We held that level here and trading here today at our lows for the day. That was right here. And the market moved off of that level with the weaker retail sales. Stay above the 110.48 level and things are okay. Move below that level and the buyers up here will be feeling a little bit nervous having bought near the high prices for that currency pair. The Aussie versus US dollar on the daily chart, there's no denying that we're in a bearish move to the downside here. But we do have some lows here going back to the month of December. That's where December came in. December here we had a low of 88.19. We had a low of 88.21, and so that is a support level. If you look at the month of January, when we fell below this 20-ish type of level, we only had 1 bar where the market closed above that level. And the rest of the time, the market stayed below that level until early in February. The market broke to the top side and we didn't look back. So we're back down to where we broke in February. at that 88.19 level. We got down to a low of 88.30 in trading here today. Off the hourly chart, we also have support at the 21 level against this underside of this trend line with 1, 2, 3, 4, 5 different points along it. So look, buyers are coming in here, but we do have a lot of resistance up above, including the 88.94 level, which is a topside trend line. That will be our next one of our next targets on the top side. Before that level, those levels, however, we have the 38.2% retracement at the 88.67 level. That's what we'll be looking for that currency pair. The New Zealand versus US dollar, this currency pair held once again the 200-hour moving average. We held it here, 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 and today we found sellers against the 200-hour moving average once again. We are below the low levels from last week at the 80.73 level, and really nothing in the way of support until we get down to this lower trend line at around the 80.06 level. Let's call it the 80 level. We're currently trading at 64. So the bias remains to the downside. If you're short here, you probably don't want to see the price move back above the previous low from last week. Those types of little breaks to the downside and move back above the old low tends to lead to short covering to the top side. Finally, I will take a look at gold here. Why? Because gold moved above the 100-hour moving average in the top side trend line here. We also moved above the 200-hour moving average, which is the first time going back to earlier in the month, September 2nd to be exact. But that failed, and we started to rotate back to the downside. So the U.S. bombing in Syria led to the rally to the upside, and then the after the fact, well, seeing that, done that, sell gold back down is pressuring that currency pair. So there, I looked at, I think 6 or 7 different currency pairs, taking about a minute on each of them. I hope you learned some key technical levels and biases from my report. My name is Greg Michalowski, and if you like this video and want to see more or be included, please, not that one, you want to go to this one right here. Click on the subscribe button, and also for daily Forex market commentary, visit us daily at forexlive.com. Bye-bye now. Good fortune with your trading.